Welcome everyone to the Moon Bear Network. This is TDI Yoda, and if this is your first time on the channel, welcome. If you're returning, welcome back. It's been a little while since we've made a video. If you want to stay up to date, be ahead of the markets, head over to our website in the description box below, become a Moon Bear today. Send us your information via email, your Telegram username. For $10 a month, just a couple cups of coffee, you can be ahead of every single move that Bitcoin's going to be making. We're in there 24/7. We post our wins, we post our trade setups, everything, so you can see it all as it's unfolding. Without further ado, today's just a little update. I've been telling everybody I've been going to make this video. I've just been preparing for it. As you know, the markets have crashed a little bit, and crashed, I mean, it went down a few $1,000s, so you know, that's kind of a decent move. A lot of the altcoins got hit pretty hard. And the purpose of this video is going to display to everybody that gold and the stocks have really never been on the same correlation. And generally, they do sort of, they move at different times, and I'm going to illustrate that today. And also that I believe the decorrelation between Bitcoin and the stocks, they've been decorrelated, and it's been quite a few months now. And then I'm going to show you how gold will be moving differently here pretty soon than the stocks, and that Bitcoin is going to follow gold. So let's just start with I've outlined here the times of recession, times of super bear markets that we've had, you know, the 2000 and then the 2008 crashes. And here we have NASDAQ, and you see here I have 6 March 2000 to 23 April 2001 where we had a little bounce, but ultimately it kept going down. And then over here in 2007 and 2008 and then 2009, and you see these marks. Well, I've done the same thing on gold, and if you notice, let's go back here. So this is March of 2000 on the stocks, and you see what happens. And here's gold in March of 2000, right here. You see this little tiny dip, and then it goes on a tear. 23 April 2001, it goes on a tear, just a non-stop tear. So let's go to 23 April 2001 over here on stocks. What did they do? Bam, bam. I mean, just brutal for the next well over a year and a half. What was gold doing for a year and a half after that? I mean, it just kept continuing higher. So let's do the same thing here. In August of September of 2007, here you have the topping, and then it just starts crashing all the way until February of 09. So let's go look at from October of 2007 to February of 09 while they're just dumping nonstop. We have a little dip here, and then it just starts continuing, and it was going up during the time that stocks were crashing down. So we can tell here, we can see that they just don't follow each other, and it's illustrated perfectly here. So we know that they're not correlated really. I mean, the chart clearly shows that. So during times of crisis, people do like to go to the dollar, and we know that it's risk off. Well, they consider gold and precious metals to be risk off as well, as you can see in this chart here. But stocks, they consider it completely 100% risk on. Companies get hit hard during these recessions, and they don't really want to be tied up in that. So they go to precious metals and the dollar. So With that being said, what do we consider Bitcoin? What do we consider? I shouldn't say just all crypto. Let's just go ahead with Bitcoin, Ethereum, Litecoin. All right, we'll leave it at those three right there. I don't want to get into all the altcoins and all that stuff. A lot of them can be a little bit more risky, and people don't really consider them the same thing as Bitcoin. So, Bitcoin, over the last 6 to 8 months, I've noticed has actually really hasn't followed stocks. I mean, they're going to be, Bitcoin's pumping and stocks are kind of just leveling out or dumping, bleeding, vice versa. So I didn't really prepare that here on this chart, the charts today, to show you that. It's just something I've noticed, and you can go ahead and look at it yourself. So, what do I think is going to happen here towards the end of the year, as we start? We're in the middle of the year, and we're starting to get towards the fall and Q3, Q4. And what do I think is going to happen here? Well, we've been talking about recession. Everybody has, you know, whether it's already been in one, whether it's going into one, or whether, just not at all, right? So it's been, every economist seems to have a different opinion. Well, we do know that, the times are pretty rough right now. We also know that inflation is starting to come up a little bit again. And rate hikes, they don't want to, we've seen over the last few press conferences with Jay Powell that the FOMCs, that he, is committed to the 2%. It's going to be a long, tough road, but we take the data as it comes in, and we're not doing rate cuts this year. That's a guarantee. So maybe next year, maybe end of next year, maybe the year after that. We'll see how the data comes in. Okay, so what do we expect here at the Moon Bear Network? Well, at least in TDI Yoda's opinion, right? Um, well, I think that they are going to possibly rate hike again here in the upcoming next few FOMC meetings. We've already had a pause, so they're open to that. I think maybe they'll throw a couple pauses in there. So with stocks, we have, I think possibly, it came lower than a double top here. So, to possibly to flag out or something, or remove the fear that it is a double top. I mean, it does sort of still look like it could be, but I don't necessarily think so. I think it's going to climb higher. Okay? I think they are going to climb higher. Uh, we know that recessions from historical data have always come during um, rate cuts. Okay? And I think late '08, I've put out on a previous couple of videos ago, and I also put in the Telegram group, I marked out all the rate cuts, okay? And, or pauses even. And I think it was in late '08 or mid '08 or somewhere around there, they finally did a rate cut. And then the stocks all just dumped off. I think it's also because mainly the yields started to climb higher than what central bank, the Federal Reserve interest rates were. So it just made more sense to be in the dollar at the time, better yield and guaranteed, less risk. And so we're going to see the same thing come. Okay, but we know that they're not going to hike this year. So that's why sorry, they're not going to rate cut this year, which is why I think they're going to climb higher. We're not going to have our full-blown, massive, very extended bear market, you know, type of deal, recession. So that's not yet. It's just not yet, in my opinion. So I do think that Bitcoin, quite possibly, going to follow gold, and that's my official stance. Do we think that perhaps the top is in and we're just going to come crashing lower? That's always a possibility because what we have is pre-halving. So we need to take that into consideration. Every single pre-halving, Bitcoin dumps going into it and then possibly right before it or during it. And then it starts its nice climb up. Is it possible that this was a black swan right here, with the COVID dump? No. I mean, yeah, the COVID definitely shook the markets, but we always have that before the halving, to get this quick little dump off, and then whales and big investment firms can scoop up the cheap coins and start their run. So that, I don't know if we're close enough to it yet. I still think we're going to climb a little higher. I mean, as you see here, we got these are exponential moving averages, and we're sitting right on top of the 200. That blue line here is the 200 exponential. So we have a potential to find support here and possibly climb up a little higher. You see this supply line. I know that it's cutting through this, but that's because I feel like this was just a little impulse extra liquidity pump, and then this is going to be our true trend line here. We didn't quite reach it, so I do think that we're going to come up to the 31 area. Whether or not we go past this and then find support on it is yet to be seen, yet to be known. I can't say for sure that that's going to happen, and I also can't say for sure that we don't set some more bearish divergence here and then really dump off. But looking at gold, because my narrative here is that we are going to be following gold as we have been. If you notice that this chart on the weekly does pretty much correlate with what Bitcoin's been doing here. So gold came down, set some bullish divergence here, and then came up and had a little bit of bearish divergence. This long-term trend line here is very interesting. Whether or not that gets touched again to come down here, and if you notice also on its 200 weekly, it hasn't quite come down to touch it yet, but that still could happen if it touches this trend line here and this comes up a little bit. So I do think that Bitcoin will want to come up here and raise this up a little bit to time out for the gold trend line touch. And so we'll see this play out and see if they mirror each other a lot better than, say, something like this, which doesn't really have those same type of impulse waves that Bitcoin and gold show. These do not look the same. They're dang near up at all-time, passing all-time highs. We know Bitcoin did not even get close to doing that. You want to pull a fib, we can notice that we got a 236 and we could not get the 382 yet. So whether it does or doesn't here soon, that's remain to be seen. Now gold did come up and make a fresh new all-time high. That's pretty interesting. Yes, I know stocks did come up here a little bit and test this here. So you do have that, but the waves do not look the same. This was just a nonstop, barely retraced and was kept going, where we have some pretty deep retraces on Bitcoin and gold. So that's why I think that, they're more tightly correlated. I think they do view it as more of a finite asset. Like they're, Bitcoin and gold are both finite assets, with a finite supply, and how much can you mine of gold to change the circulation and supply. Same with Bitcoin. So there you have it. That's going to be the update for today. I will be putting together some more detailed technical analysis, but for now I think this will serve to help you a little bit. Yeah, like I said, go to our Telegram channel. We called this dump here. We called it back in June. We were like, hey, in 20 June, I'll bring up a message here that I have, but in 20 June in the Telegram group, I said, hey, I'm exiting. And I clearly said I'm selling off pretty big time. And we've done nothing but go down since. And prior to this crash, I said, hey, the monthly looks like it's rolling over. And we got a Heikinashi, our first red dot back then. So yeah, we were not surprised by this in the group. So like I said, it's $10 a month. You can see the value. I'll post some victories. We have tons of people in there just posting 500 and 1,000% wins. I mean, it's been great. So head on over there and check it out if you find value in this. Thank you very much for being here and hope you have a great day.